Hello, it's Adil, Mr. Intermarket Analysis, bringing you a weekend review of the FTSE 100 going into trading for the 20th of January 2014. Okay, so let's see what's happened so far and what's transpired, and we'll start with the weekly chart of the FTSE 100. I'll also be doing a review of the US markets as well on the weekend, and try and expand on currencies as well, try and give a greater insight going into 2014. Okay, at the moment just still recovering, not 100% fit yet, but getting there. Starting my first run today, so hopefully trying to get my lungs back in shape post the asthma attack going into New Year's. Okay, so let's have a look what's happening with the FTSE 100. Okay, so the weekly chart, the bull flag did actually play out. I didn't expect that bull flag to play out, to be honest. I think if you look at several of my videos, I was expecting the gaps below to be closed. Mainly that was primarily due to the fact that we had the Chinese markets, as Shanghai, exceptionally weak. As you can see, the Shanghai index, ever since it's failed the inverted head and shoulders pattern, a failed pattern equals an emotive move in the opposite direction, and that's exactly what's happened. So we've been making new lows on the Shanghai, which really is totally contradictory to what's happening in the alternative or European and US markets. So given the fact that Shanghai is a leader, there's certainly a lot of abnormalities taking place at present. So very puzzling, very puzzling, given the fact that we have intermarket analysis that should technically give you the ability to look at the markets and forecast the markets and give you a leading indicator as opposed to a lagging indicator. So this is quite important. Now, given the fact that the Shanghai index is making lower lows and lower highs, and also given the fact that now we have the Nikkei starting to lag. So if I go to the Nikkei chart and I bring the chart of the Nikkei up for you, you've got H&S formation Nikkei, and given the fact that you also have the yen pairs, now the yen has started to strengthen. Okay, adding the fact that you've got tapering talk now back on the agenda again. That's why you had a flush late into the US close. Okay, and given the fact that a lot of the data itself isn't signaling deflation, so therefore there won't be a rate cut in Europe, which is obviously negative. Given the fact that retail sales beat in the UK, which means that higher interest rates in the UK, although the inflation has been tamed, but therefore going forward, given the fact that retail sales have been much better than expected, you are going to get inflation down the road, hence the reason why sterling started to rally, and obviously that's going to hurt British exports as well. So there's a lot of fundamental arguments for and against at the moment. I'm trying to focus on charts and give you resistance and support levels, and obviously those that are on the live analysis get the actual insight into fundamentals. Once fundamentals and technicals align, that's when I take the trade. Adding the fact that if intermarket variables align, then I also take the trade as well. So it's very important, not just FA and TA, but intermarket analysis as well. But having said that, intermarket analysis is very puzzling on the relationship between the FTSE and the Shanghai at present. FTSE obviously is powering ahead. Shanghai is making lower lows, lower highs. So one of them has to be Pinocchio. Either the Shanghai is Pinocchio, is giving us an incorrect signal, or we have the FTSE, which is Pinocchio, and it's giving us the incorrect signal. Now, I would like to go, and I always do this in my intermarket analysis and that theory of how markets are interwoven. China dictates the world. Why? Because it's the powerhouse. Therefore, if China's weak, everything else must follow. So I am expecting weakness in all European and US markets going forward. Okay, especially given the fact that the S&P has hit a double top and the Dow is into resistance, etc., etc. So I'll go into that in detail on the US markets. I'm going to make the US market video for now. Okay, so weekly chart, what levels do we have? Okay, so we obviously got this key pivotal level at 6830 region. Okay, so watch out for that. Obviously, I've been short a few times on a Friday, Thursday, and so shorting that. Obviously, that's certainly giving me mixed bag of results, not spectacular results. So plus 10, plus 15, nothing spectacular. I actually finished with 100 points last week, which really wasn't good enough for me, to be honest, given the fact that I finished with 350 points the week before. Although the last 2 weeks of December were negative, so minus 200, minus 80, so which wasn't spectacular. But having said that, the market is very tricky right now. I have tried to short the DAX and the Euro, etc., etc. or should I say go long on the euro on Friday. I got stopped out -40. Tried a long on the short on the DAX, stopped out -40, spiked out there before it reversed powerfully. So mixed fortunes last week. Although it was positive, plus 100 points, but not good enough for my standards. Okay, I should be hitting 200 points plus week in, week out. Okay, so very tricky right now, given the fact that you are trying to look for resistance levels in the market, and yet the market wants to power ahead, even though we have tapering talk, even though we have China going down, even though the yen pairs are not confirming the rally in Europe and the US. Very tricky. Okay, adding the fact that you had the Aussie smoked. What was amazing was that you had Shell with a profit warning. We had Aussie hammered overnight with weaker jobs, and yet the FTSE still managed to move higher. Now I'll explain the FTSE and why it moved higher, but unbelievable. So certainly not in concert. Okay. So weekly chart resistance, obviously, like I said, we've got 6830 region. Obviously, if you crack that and the market wants to continue short squeeze, then 6875. If that breaks, then obviously 6900 is next on the weekly chart. So watch out for that. In the meantime, if 6830 holds and we go back and retest this level at 6760, if that breaks, and obviously we go back and retest the trend line, or we go back and goes back to the support level at 6400 going into next week. Okay, 6400, to be honest with you, according to my understanding, is not an impossibility. Okay, it's certainly a very real sign of occurring. Okay, so now next we look at the daily chart. Okay, so daily chart, we have resistance here at 6840, then obviously 6840 to 6875. Obviously we had this previous trend line resistance here at 6820, which obviously has been cracked. Okay, so let's see what's happening here. So okay, so over here we have previous obviously resistance equals support, so we need to go back down to 6770 region. Potential, that will be a key support level going into next week if we do come back to it. If 6770 cracks, then obviously look for we'll look below that 6670 region and that'll be the next bastion of support. Obviously if we break this level, like I've already explained, the weekly chart, if the 6840 level breaks, then hey presto, short squeeze arama, and after that there's no telling where it can go. 6875 will be the first destination. After that it just continues short squeezing higher and taking all the stops. Okay, now let's have a look at the FTSE 250, see if we can gauge any sort of pattern from there. This FTSE 250 has been lagging. We had a potential hanging man scenario here, then obviously we negated that to a certain extent, then we negated that with a bearish red candle. To me it looks like it wants to retest the breakout here. If not, test the support level here around the 15900 level. If not, then obviously we go back and retest the breakout, which is the 16,000, so that's 16 above, 16,000 below. Okay, so watch out for that. Now let's go to the micro time frames and see if we can spot anything there. So I always go to the 60-minute chart first as an individual. What do I spot? Hey presto, H&S formation. Okay, so we've held the right shoulders obviously below 75% and holding, and we're looking for a potential right shoulder and obviously smoke. The market getting smoked on the way down. We need to fill this unfilled gap here around the 6760 level, and obviously if you project the target here, it goes down to 6775, the H&S target. Okay, and now that's all I can see. Basically you've got a bearish engulfing candle, bear flag scenario, and down we go for the right shoulder. Okay, so watch out for that. Let's go to a 10-minute chart, see if you can spot anything there. Same thing again, we've obviously got H&S formation here. You got the unfilled gap like I've discussed before, around the 6765 region. Okay, there's nothing else really other than that. So 6765 needs to close before, and if we start to mount another rally now on the 10-minute chart, so watch out for that. You got topping tails there, right shoulder. Obviously if you use your Fibonacci retracement tool here and take it to pivot high to low, it's around the 61 to 75% resistance. If that obviously 61.75 were to go, so 6835 to 6830 were to be cracked, the next level is 6854, 6845, then obviously we short squeeze higher on the larger time frame to 6875, and after that Bob's your uncle. Okay, so ring Bob and find out. Okay, or Ben's your uncle, ring Ben and find out. Okay, it's probably short squeezing the markets higher by printing those dollars. Okay, so for now, watch out for that. Okay, 200 MA will be support around the 6800 level, so watch out for 6800. Obviously, like I said, the ultimate gap level. So next week we should certainly look to close the 6765 level. So once that closes, watch out, major support. That's exactly where I'm looking forward to, closing that gap, and I'll take it from there. Okay, so I think that sort of covers the indexes for now. What I'll try and do is give you an insight into the actual equity variables that I follow as well. So one of the key equity variables that I'm adhering to at the moment is Barclays. Barclays is talking to me and telling me it wants to go down. Why? Because number one, it has an H&S formation on the 60-minute chart, given the fact that the US bank results have come out now. They're not spectacular by any means, okay? And we're looking to flush H&S formation. Boom, down we go. Boom, tish, 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 bang, bang. Okay, down we go. We've got unfilled gaps here around the 265 level. You got an unfilled gap here around the 252. Expect Barclays to close that. Obviously, I've been bullish on the fundamental analysis service. I call for a rally. I call for the gap to close around the 295 level. That's exactly what's happened. And hunky dory, I made a 5% gain on that, by the way. All those that want to see the fundamental analysis service, it's free. I'm offering it free for the next, it's been over a month now. It's been free, I think, almost a month now. I post my live trades. So the trades I had, the last trade that I had on here was a long, last week, USD JPY long close 110 points, spectacular. I've still got my CAC swing short open, and I've still got my Aussie short open as well. The Aussie obviously is in the money. The CAC obviously is underwater at the moment, but like I said, given my analysis, it will transpire and it will come into fruition. Okay. So that's basically where we are at with regards to that. So yeah, if you want to follow the fundamental analysis service, it's free for the next month or two. Live trades, swing trades. I don't do day trades on here, just swing trades. I'm looking to try and nail, obviously, just basically whatever I can. Doing so far, well so far. So far, so good. I've only had one trade hit stop loss, I think, so far. So other than that, everything else has been hunky-dory, okay? The live analysis service, obviously, those of you that want to gain my insight on a daily basis as opposed to these videos, then you can certainly join. If you go on live analysis service on my website, here you'll certainly read. From there as to how I operate, how I give real-time analysis, real-time text messaging alerts to subscribers, real-time entry, exit, trade management, obviously commentary, etc., etc. Okay, so that's something that you can visit. If you go to the free trial, obviously you follow the details by clicking on the free trial above on the tabs, and then hopefully that should explain to you exactly what's happening there. Okay. Okay, then, right, no worries. Okay, let's go back to the market. So yep, Barclays H&S formation, so watch out for that. That's signaling to you that the banking index is in trouble. If the banking index is in trouble, then obviously what does that mean? It means that the FTSE is in trouble. So we've closed the gap here beautifully, and obviously now down we go. We've got an unfilled gap below around the 265 level, so watch out for 265. The inverted head and shoulders pattern was projecting 275 to 245, 30 points above. 275 plus 30. Oh, yep, there you go. We're almost there. We almost hit 300, so that's more than enough. And the market's flush for now. Okay, so watch out for that. Okay, so that's into resistance. So what does that mean? The FTSE is into resistance now. If I go to my alternative variables, these are the ones that I look at. So the banking index, H&S formation on the FTSE. So banking index, H&S formation. What do you think happens to the FTSE? It gets flushed down the toilet. Okay, that's basically what happens. It can't be more blunt than that. Okay, there's no further clarification, to be honest. Okay, so yep, so 10-minute chart of here. We are higher lows. We've broken that series of higher highs, higher lows, and now you got the unfilled gap below here, and you've got unfilled gap below here. This is certainly looking bearish at present. Okay, if you go to your 60-minute chart, it's not exactly looking spectacular right now. Okay, so keep an eye out for that. Okay, now let's go back to what was the other variable that I wanted to show you? Realistic. Okay, well that should be sufficient for now. Showing you all the FTSE 10-minute charts. Now just giving you an example of the mining sector. Ah yes, oil and gas. That's what I wanted to show you. Just remember now. Okay, so oil and gas. If I go one way through, show you the mining retail sector. Obviously, you can see again symmetrical wedge or rising wedge, contracting wedge. That means it's bearish. Market's going down. Oil chart. Let's see oil and gas. Okay, I need to bring this up quickly. Let's just see if we can decipher something here. So obviously it's held up for resistance zone there. The market's flushed. Therefore, it's a positive confirmation that the market's rejected those prices. We are coming into gap fill resistance, and the market will flush down. And what was the pattern that you can see here, which is pretty clear and evident? Basically, you got the left shoulder, head. We've made a double top, triple top head, going back, creating the right shoulder now, and then flush down the toilet. again, that doesn't bode well for the FTSE 100. So if you take all that into consideration, that's my view for the week. We are bearish. Going into Monday, it'll be bearish. I did have a short position to FTSE. I'll be reopening that, looking for further downside on the FTSE 100 going into next week. Okay, so early targets are 6,800 and then 6,765, which is the gap fill level. Okay, so wax on, wax off, wax on, wax off, risk on, risk off. Goodbye now.